Hi, everyone, and welcome to tonight's webinar. We're actually going to be talking about due diligence and what you should be looking for in the companies that you're thinking about purchasing. So I wanted to let you all know that this webinar, as all the rest, is being recorded and will be uploaded onto the website within 48 hours. As always, we want this to be something that helps you. We want to make it interactive. You are open to asking questions throughout the presentation. I always try to give a little time at the end for you to have an open discussion about anything that you want. So just to get started, I want to make sure you can hear me okay and you can actually see the slides. So if you could raise your hand and let me know that you're hearing me okay and you can actually see, okay, great, see the slides, that would be fantastic. And again, as always, we're here to help you. We're here to help you to succeed. If there's a particular topic that you want us to cover, please reach out to us and let us know. I'm trying to make these as helpful as possible, and I'm trying to think about, what are the things that I could help you with on these webinars. If you could provide us with feedback on what you feel is helpful or what you feel is missing, or if you feel we should cover something else, we want to help you. We want to help you and help you to be successful. So if you have any comments or if you have any feedback about what you'd like to have covered, please send that to Patrick through the website. So, all right, we're going to go ahead and get started. So I've kind of gotten in the habit of talking about what kinds of deals. This is the criteria for deals that Mike actually looks for. Again, these are his criteria. It's a good criteria for you to follow as well. I guess what I want to make clear is that if you find a really great business that doesn't quite fit this criteria, you can still go after it, but Mike will most likely not get involved in it. So again, it's on a case-by-case basis. So what he's primarily looking for is established businesses. He's not looking for startups. He's looking for businesses that have been in operation for 2 to 3 years or more. He's looking for businesses that have gross revenues of $1 million or more. Again, that's gross revenue. He is looking for businesses in the following industries. So he's looking for manufacturing, distribution, retail. And when we're talking about retail, we're talking about online retail versus brick and mortar retail. I can't even begin to tell you how important it is that it be online. Everybody that I've been talking to in my circle these days is talking about the Amazon effect and how Amazon is really forcing businesses to provide their products online. And keep in mind that Amazon is actually getting into the service industry. They're getting into foods. They're getting into everything. So there's a lot of talk about the Amazon effect. So if you're going to go after a retail business, make sure they're doing business online. Technology is another one. And then service, so professional services or services like house cleaning or other services for the consumer. These businesses can be outside of the United States, but if you're going to pick a company that's outside of the United States, you want to make sure that English is the primary language that's used in the business. And of course, if you're looking at businesses in other countries, there's probably other compliance issues that you need to think about. The tax structure will be different. Some of the employment laws will be different. So you want to make sure you're very well versed. But if you're going to be pursuing a business that's outside of the U.S., one of your first criteria should be that English is the primary language that's used in the business. These businesses can be online or offline, but again, for retail, it has to be online. He does not go after any restaurants or franchises. He also does not go after assisted living as a rule. Now, there's been some rare cases, some unique situations where he might consider assisted living, but there's all kinds of things that he looks at. It's a very unique situation if he's going to go after one of those. And then the optimal qualities in these businesses is that you want to look for businesses that are sales or marketing driven. You want to make sure they possess some exclusivity or uniqueness in the product's design or service. So what's the niche? You want to make sure that the product or service has a high gross margin. I would also say you want to look for a profit margin of probably 20 to 30%. That's comfortable. Product or service has a built-in demand. And the product or service cannot compete solely on price. Cheapest is not always best. That's my mantra anyway. I never want to compete on price. I think that if you start doing that, you're going to be a commodity. You need to think about how do you add value. And you want to make sure that people understand what the value is of it. So that I think that can actually be addressed through your sales techniques and your marketing techniques. Any question on these criteria? And again, raise your hands if you have questions. I don't do well with the written questions. I will try to take a look at those if the other thing that I like, because I think it's a valuable tool, is the free business valuation tool. And what I have shared with everybody on these webinars is that if you're out there looking at businesses and you're looking at a particular listing, most of these business listings do have financial information available. There's some initial, a lot of the, if you're looking at what the questions that have to be answered in Deal Vault, a lot of these listings will have that information. So you can actually plug in some of the numbers into the business valuation tool to see if the number that they've come up with is actually a valid number that's close. I can't tell you how many times a business owner, if they've put their time and effort and years into a business, when it's time for them to retire or to think about selling the business for whatever reason, they don't necessarily think about what the true value is based upon certain conditions within the business. They'll just pick a number literally out of the sky. And a lot of people will actually pick a number that they think they can retire on. So that's not necessarily the right number. And you want to make sure that when you're actually looking at a business that you're interested in, you want to make sure that that business is actually worth the price or less, right? You want to make sure that it's something that, or if you see huge potential in it, you'll have an aggressive plan to actually increase that value to get it to a higher value. So again, great tool. And this is something that some of the people that I've coached have actually used this and were able to use this in their negotiations. So we had one example of a person who actually was working with a business owner who was was not very flexible, was not willing to collaborate or actually negotiate, was hard pressed to have a certain price, was not willing to give an inch. And once the financials were put into this business valuation tool, there were a few things that were discovered in the financials. And it turned out when all the numbers were plugged into this valuation tool, the number of the value of the company was 0. So it actually put the person who's part of this program in a strong negotiating position. And he was asking me, he goes, well, Angelica, I'm still interested in this business. I said, act like you're going to walk away. If they're not willing to talk, if they're not willing to be flexible, you've now shown them that they have a 0 value. And the business owner actually was given access to this valuation tool as well and couldn't really do much better with the numbers to get the value up. So all of a sudden, things changed. All of a sudden, this seller was able to talk about offering some seller financing, willing to stay on board for future revenues to actually help in the transition. So it completely changed the bargaining position of the person wanting to actually buy this business. So this is an extremely valuable tool. It is free. I would say that if you've got a more complex business, it's probably going to be worth your while to actually bring in a professional to do the valuation, especially if it's a larger business and a more complex business. But this is a great tool to use as a resource, and it's a great tool to see if the listing is even in the ballpark of what that business is worth. I also want to stress again, I know that I've been saying this on the last few webinars, but for those of you that this is your first one, if you are utilizing the Deal Vault, and if you have found a company on the Deal Vault that is of interest to you, when you are negotiating that deal, you must remember that there is somebody that did the initial research and posted that company in the Deal Vault. That person needs to be included in your negotiations. There are some people that are in this program. They want to do research only. They don't want to be hands-on on the business. So they are expecting a certain percentage of the deal for the effort that they have done to do the initial research and to compile the information that is in the Deal Vault. So if you are using a company that was listed in the Deal Vault, you want to understand that there's another party that has to be considered in your negotiations because they are expecting a payout when that business sells. Any questions on that? Okay. So basically, we're going to go ahead and look at things to look for to do your due diligence. The first thing I want to talk about are some things to look for. It's like the 9 biggest financial warning signs of a company that is failing. Okay, so these are some things to look for initially to see if this business is worth pursuing or if it is a business in distress. And even, I mean, you might still want to go after this business, but you need to be aware and be eyes wide open if it is a business in distress and have a game plan of how you are actually going to increase the value of that company, or how are you going to improve the situation so that it's no longer distressed. So the first thing, the first symptom that you can look for is that the company is struggling to be profitable. Okay, so sometimes this isn't always very obvious, because right now we're in a market where it's pretty easy to raise capital. There's all kinds of venture capital people out there, but sometimes even the most talented business people, no matter what anybody claims, they miss the fact that a company is not profitable. We actually had a discussion today about a business who was at 10 million. They have 10 million in revenue, but yet they weren't profitable. They weren't worth. I mean, they had zero profitability, and even though they were bringing in the money and they were able to pay their employees and they were able to pay their suppliers and everything else, there was nothing outside of being able to just sustain and pay the bills. There was no profit in it at all, and the owners basically, weren't really getting any money from this business, so it was not profitable. So that is something that you definitely want to take a look at. You want to make sure that the business is profitable. The second symptom to look for in when you're checking out the financials is that the margins are slipping, and I'm talking about gross and net margins. So if for whatever reason they are having to offer the product or service for a smaller price, that may be chipping away at their profit margin, that could be a sign. If they have, if for whatever reason their sales are down, right, and now all of a sudden the gross margins are going down because they're not able to bring in enough customers, that's something to look at. The third thing to look at is how are sales? Are the sales stagnant or decreasing? That's something that every company should always be looking at. What ends up happening sometimes with I actually have a client who has a company that's been in business for, I want to say 15, 20 years, and they've basically had the same 10 customers that entire time. And they have been able to, with those customers, they've actually upsold them to some additional products and services, which has been able to keep their revenues up. But it's very high risk, because if any of those customers leave, that's going to be a huge dent in the business. And this particular business has not been able to figure out how to bring on, how to find, how to actually close any new business. So even though it may seem like a company is busy and they've got a lot of revenue coming in, take a look at that closely. Take a look at the number of customers. Take a look at what kinds of sales there are, and you want to analyze if they're stagnant or decreasing. Okay. The fourth thing to look at is your rate of sales growth is declining. This is something to watch out for. And again, this is another very subtle point. So even if your sales are increasing, you have to keep an eye on the rate of growth. And what I'm talking about here is, for example, when a company first starts, like for example, if it's much easier to double your sales when you had $1,000 in revenue versus if now you're $1 million company, right? So it's like when you're starting out, and it's easy to double your business, so it's like when you're a startup and you got your first client and you sold your first product or service, if you get another one for that same price, right, for the same amount of money, now you've doubled the business. So you need to take a look at what kind of growth are you experiencing within the company, and is it meeting the goals or the expectations of where you'd like to see that growth? So, again, it's much easier to double your sales when you had 1,000 in revenue versus 1,000,000. So you need to take a look at that and keep your eyes on that rate of growth. The fifth thing to look at, you're profitable from a revenue perspective, but you do not have positive cash flow from operations. Okay, so this is a little more complex to explain this completely, but it's very possible to be profitable and still not generate positive cash flow. So at some point, it's like business owners should have a good accountant or someone who's experienced in financial analysis. I can't tell you how many businesses I know that have a weakness in this area. I actually have a client that works with small and mid-sized businesses to actually, first of all, maintain proper bookkeeping records and then be able to analyze that and be able to put together the necessary information if they needed to go to a bank or if they needed to get credit or if they needed to work with a supplier. So this is something that a company could be very profitable, but if they don't have a positive cash flow from their operations, that's a huge danger sign. The other thing to look at, this is the sixth thing to look at, is there is no new sales, no new customers, no new sales, no new leads. The pipeline is very flat, and you want to make sure that there's metrics in place to be able to measure this. So if they don't have the metrics, then they probably don't have good data, and they probably are clueless in terms of what's going on with regards to sales, their pipeline, etc. So you want to make sure that they have potential for new customers, new sales, that there's new leads to put in the pipeline. You want to make sure that that's not flatlining. The seventh thing to look for, another symptom, is employee turnover is higher. So if you're noticing that some key employees have left, if you're noticing that they're unable to retain employees, that's a warning sign something's going on within that business. It could be that they're having issues with their finances. It could also mean that they have a culture which could impact finances. That could be like an opportunity as well. If you see that leadership is unable to motivate the employee, that might be a problem. So that is a sign, though, that there's something going wrong within that business. And so if you see high employee turnover, that's definitely something to investigate further. The other thing that's a sign of them, becoming distressed is that the product or service that is offered is decreasing in quality. So again, you're going to need some metrics to measure the quality of the product, and sometimes this might be covered up a little bit because there's been a good buzz or some good marketing or good public relations that has been done. But the quality of the product or service should speak for itself. You want to make sure that you're going to be able to offer products that are of high quality, so that it's going to be really difficult to lose, right? It's like you're going to have to really work hard to lose with that opportunity. And I've talked many times about my little tool and die company that has very little competition, that they're very much in a niche market, and they literally hardly anybody makes what they make with the quality that they can make these products. So they, despite all the dysfunctionality, despite the lack of doing any sales or marketing, despite the fact that they don't have on-time delivery, basically they're still making money and they're still able to sustain themselves and pay their workforce. And they actually see some profit, which is amazing. So that is something that you want to look at to make sure that the product or service that is being offered by the company is of high quality. Now, this one's kind of interesting, and this is a subtle thing too, but this is the ninth thing to look for. If you notice that the office, the workspace, or the headquarters looks messy, okay, like if you walk into a company and it looks like in disrepair, it looks like it's messy, it looks like it's dirty, it looks like it hasn't been cleaned. I've seen companies that are starting to have problems. The first things they get rid of is the cleaning company. They start having the employees clean up the facilities. They're doing all their own maintenance. So that is something to take a look at. Or if they haven't modernized it, like if you have a space that is very outdated, if you don't see any new technology, I mean, that's kind of a warning sign. That means that they haven't invested in anything. It might be because they don't have the money to do so. So those are some things to look for. Those are some obvious things that you could look for that could signal that a company is going into distress mode or might have some financial difficulties. Any questions on any of those 9 things that I brought up? Okay. So let's go through. So this is kind of like a checklist of what to go through when you're doing your due diligence, okay? And again, these might need to be checked out. You have to decide when it makes the most sense. I personally feel it's a really good idea. If there's a company that you're really excited about, the more due diligence you do up front, the stronger your letter of intent is going to be, and the better prepared you're going to be when you go into your negotiations. So you want to make sure that you want to make sure for organization and good standing, you want to basically get the company's articles of incorporation and all of the amendments. Okay, so you want to make sure you have those documents. You want to make sure that you get those from the business owner. Keep in mind now that you want to make sure that you sign non-disclosures with the business owners before you request any of this. So always make sure that you sign a non-disclosure anytime any information about the company is being disclosed. You want to make sure that the business owner understands that you're coming in, in good faith, that you're not going to try to take what they've done and steal it and go to somebody else. So you want to make sure that you sign a non-disclosure, and the non-disclosure template is available on the website. So you want to look for the company's articles of incorporation and all the amendments. You also want to make sure you take a look at the company's bylaws and all the amendments. You want to make sure that you take a look at the company's minute book. So this would include all the minutes and resolutions of the shareholders, directors, the executive committees, and also any other governing groups. And I can tell you that companies, this is a weakness sometimes. This is something they should be doing on a yearly basis. If they're not, that's an issue. You want to make sure it gets updated. You also want to make sure that you see the company's organizational chart. You want to see how they're structured. You want to see who the key employees are. You want to see who the leaders are. You want to also see the company's list of shareholders. You want to find the number of shares that are being held by each. And I got to tell you something. One thing that was a bit of a surprise that I didn't think about was, and we'll talk about this, actually I'll wait, I'll tell you about this later. You want to see if there's any trust agreements. You want to find out if there's anything being held in trust for any family members in a family business. That's something that's very common. You also want to get any copies of any agreements relating to options, voting trusts, warrants, puts, calls, subscriptions, and convertible securities. You want to make sure that, and this is something that has to be updated on a yearly basis, you want to make sure that there's a certificate of good standing from the Secretary of State of the state where the company is incorporated. And actually, you could do a lookup for that really quick. You just have to go to the Secretary of State for the state where the company is located, and you can actually look that up. So that's a non-issue. So that's real easy for you to look up. You also want to make sure that you get copies of active status reports in the state of incorporation for the last 3 years. You also want to have a list of all the states where the company is authorized to do business. You want to basically get annual reports for the last 3 years. You also want a list of all the states, provinces, or countries where the company owns or leases property, maintains employees, or conducts business. And then you want to have a list of all of the company's assumed names and copies of registrations. So you want to, if there's any doing business as entities out there, you want to make sure you have all of that information at your fingertips. So in terms of the organization and if it's in good standing, these are the kinds of things that you would be looking at to determine if the organization is in good standing. Any questions on any of those things for determining if the organization is in good standing? Okay. All right. You also want to, we already went over this. Okay, so that was the organizational chart and everything else. Sorry. Okay, so what to look for in terms of financial information. You want to get audited financial information, financial statements for 3 years, along with the auditor's report. The reason you want audited financial statements is that means they have been verified by someone that was an outside entity to make sure that the financial statements are valid. This is key, especially when you get down to finalizing your deal. Remember that people can make their books look any way they want at any given time. So that's why it's really important for you to get audited financial statements for 3 years. The other thing too is that you want to get current financial statements. If you don't get current financial statements, you're not going to have a good idea about what's happening with that business today. I had somebody that I was on a coaching call with where they were really excited about the financials, and I found out that the financials were 3 years old. And I asked, I go, well, do you have any financials for now? And they said, no. I said, well, okay, how do you know that things are still the same? So it's really important for you to get current, financial statements. You also want to make sure that you get the most recent unaudited statements with comparable statements to the prior. So you want to get last year's and this year's. That's all the current, statements, banking statements, any other statements regarding any purchase orders, any kind of lines of credit, etc. You also want to, if there's been any audits done on the company, you want the auditor's letters and replies for the past 5 years. You want to get the company's credit report if it's available. Now, Dun & Bradstreet, you know how we have our credit bureau services for our own personal lines of credit. Dun & Bradstreet actually does it for businesses. So, corporations should actually file for a Dun & Bradstreet number when they open up their doors for business. So, if they've done that, you can actually look up their credit report on Dun & Bradstreet. You also want to get any projections. You want to get their capital budgets and strategic plans. So you want to see what they're projecting for future for the business. That might give you some opportunities to see what you can do to actually make things even better. If they have any analyst reports, you want to get those. You want to get a schedule of all indebtedness and contingent liabilities. You want to get a schedule of the inventory. So you want to see how often does the inventory turn. You want to see what, in terms of inventory, you also want to keep, like if it's a manufacturing company, you'll need to know the inventory of their raw materials. So you want to have that, and then you also want to have an inventory of the items that could be sold to go out the door. You want to get a schedule of accounts receivable. So you want to see what accounts receivables are out there. So that is the money that is due you that has been invoiced. So you want to actually see that. You want to have the schedule of accounts payable of things that you owe money for that you have to pay out to vendors, suppliers, etc. You want to get a description of depreciation, amortization methods and changes and methods over the past 5 years. Understand that there are different methodologies and there are accountants, depending upon the type of business, there are different ways to do this. So you want to make sure you understand that. Sometimes there's multiple ways to do it, and depending upon who the accountant is, they'll pick the one that they're most comfortable with. You want to have an analysis of any fixed and variable expenses, an analysis of the gross margins, and that's to help us actually determine if this is a business that's in distress. You want to get the company's general ledger, and you want to get a description of the company's internal control processes. Now, I can tell you that I've been talking to a few people recently that actually do bookkeeping and financial analysis for businesses, and I just in the last week I have heard of situations where these service providers are going into businesses for the first time. They are new customers where people have not reconciled their books for a year, 2 years, 6 months. I mean, that's crazy. How can they? And I'll tell you a story. I have somebody I know that's a customer of mine that landed a new client. He's been working there for 3 weeks. And that business owner was saying, I just want to get an idea of my cash position. I just want to know what my cash flow is, etc. And this particular service provider kept saying, well, I need to get first of all, I need to reconcile your books. I need to know what's outstanding. I need to know what checks have been written, what invoices are outstanding, which ones have been paid. And she kept insisting on this. And he stuck to his gun and said, I can't do that unless I have the necessary data. Well, he finally reconciled all of the books to current, and he found $50,000 of revenue that was actually recorded as being received, but the money was nowhere to be found. Well, guess what? The checks were never processed. So here were checks laying around that people had marked as being deposited and put into the bank accounts, and they never were. So unless this person hadn't done the work to actually reconcile everything and to account for all the money, I mean, there's no way he can do cash flow, right? So it was kind of interesting. So make sure that the company that you're looking to buy is reconciled, that their books are current, and that they have accounted for their receivables and payables. Okay, it's very important. Any questions on financial information? I know I'm going kind of fast, but we got lots of different things here to do. Okay, physical assets, and this is going to depend on the type of company that you're dealing with, because if you're dealing with a professional services company, it might not be as much. But things to look for are a schedule of fixed assets and the locations. You want to look for all the UCC filings. You want to get all leases of equipment, and you want to get a schedule of sales and purchases of major capital equipment during the last 3 years. So those are all things you should be looking for as part of your due diligence. In terms of real estate, you want to have a schedule of the company's business locations. You want to make sure that you have copies of all real estate leases, the deeds, the mortgages, the title policies, the surveys, the zoning approvals. And you also want to make sure you have any variances or use permits. That's also very important for you to get as part of your due diligence. And here, this is why I was waiting till we got to real estate. This one company I was dealing with one time, they actually owned the land and the building where the business was located, which we thought was a huge plus. Well, it turned out that the real estate and the property was tied up in a trust for family members, which ended up causing us all kinds of issues when we were in the negotiating process. So that was something that came up as a surprise. So if you're dealing with somebody that owns property and the building, be careful that the family isn't involved, and who has a say and who has decision-making authority on that property and that real estate. Okay. Any questions on those items? Intellectual property, and what we're talking about here is any type of branding, any type of processes, any type of, it might be a patent, it might be a process, it might be a certain way of doing something. I mean, so you want to think of anything that is so a schedule of domestic and foreign patents, or even the applications. You want to make sure that you have a schedule of, and when I talk about a schedule, when you go through the process of trademarking or service marking a business, those have to be renewed. Those they're in place for a while. I forget I think it's state by state. I don't remember what the actual laws are with this and what the time frames are, but these are things that do expire. So you want to make sure you understand the schedule of the trademark and all the trade names. You want a schedule of the copyrights. You want a description of important technical know-how. If this business has something unique about the way it, for example, I know a company that does heat treating, and they primarily do heat treating for the automotive industry, and they have a patented procedure of why they do this, where they are able to their products that they heat treat have a much higher stress level than their competition. So what is it about, like if there is a company that has something special like that, what is it about their process? What is it about their differentiator with making a better product? What is that you need to know? If there's any technical information that you require for that, make sure you know. Also get a description of methods used to protect trade secrets. If you're dealing with something in food, right? It might be a recipe, right? It might be if you're dealing with cleaning, is there something about the way they're cleaning the products that they're using that makes it better? Those are some things that you want to think about. Is the way that they fold something better than somebody else? So just understand, what are those methods? What are the things that they do to analyze something that might be better than somebody else? You also want to make sure that you have all of the work for hire agreements. You want to make sure that you understand who's working there, what are the agreements, if you have consultants there, and what is the knowledge that they have that's important to the business. You want to make sure that you have all those agreements. You want a schedule and copies of all consulting agreements, agreements regarding inventions and licenses, or assignments of intellectual property to or from the company. You want to have any patent clearance documents, and then you want to have a scheduling summary of any claims or threatened claims by or against the company regarding intellectual property. So if somebody's coming after this company and saying, hey, you're using our intellectual property, or if the company is doing that, actually filing a suit against somebody else who's using something illegally, or they think it is, you need to be aware of that as well. Any questions regarding intellectual property? All right, employees and employee benefits. Obviously, it's really important for you to get a list of all the employees, which includes their positions, their salaries, and also their bonuses. And you want to see that. You want to see what's being paid within the last 3 years, and you want to find out overall what have they, how many years have they actually been with the company. You want to make sure that you see all of the employment, consulting, non-disclosure, non-solicit, any buy-sell agreements, any non-compete agreements between the company and its employees. If you have a company that is employee-owned, how is that structured? That is something that's you're going to have to basically understand. You want to see the resumes of any key employees. You want to see the personal handbook of that company and a schedule of all employee benefits. You want to know their holiday policy, their vacation policy, and any sick leave policies. What is their maternity leave? Do they have any other special type of benefits for their employees? I actually knew a company that catered towards working mothers, and they actually had childcare available in the company location. They also had massage available that was free to employees. So there was some interesting. They were actually rated as one of the better places to work. They actually won an award for that. So you want to be aware of all that stuff, because these things do add additional costs, and there's also some liability issues on that as well. You also want to make sure that you have a summary of plan descriptions and of qualified and non-qualified retirement plans. You want to definitely be up to date on that. You also want to be, you want copies of any collective bargaining agreements, if any. That would be something that would be, if it's a union shop, you'd probably want to take a look at that, what agreements are in place. You also want to have a description of all employee problems within the last 3 years, including any alleged wrongful termination, harassment, and discrimination. So you want to be aware of that as well. You also want a description of any labor disputes, any requests for arbitration, any grievance procedures that are currently pending or settled within the last 3 years. You have to know what are the health benefits. I mean, obviously, we all know how expensive health benefits are these days, so you want to know what are the health benefits for the employees. Also, are there any welfare insurance policy or self-funded arrangements? You want to have a description of workman's comp claim history, right? You want to know if there's been any claims. You want a description of unemployment insurance claims. You also want a copy of all the stock options and stock purchase plans, and also a schedule of the grants, okay? Any questions on the employee and employee benefits information? I know I'm going fast, but I want to make sure that you have this information. And again, this is being recorded, so if you want to jot this down when you get closer to actually working with a business that you're interested in, you can always go back and refer to this. For licenses and permits, you want to make sure that you have copies of any government licenses, permits, or consents. You also want to make sure that you have access to correspondence or documents that are relating to any proceedings with any regulatory agency. So that's really important. If you're dealing with a company that is dealing with hazardous materials, you want to make sure that you get a copy of environmental audits, if any, for each property leased by the company. You want to get a listing of hazardous substances and how they dispose of them, okay, that are used in the company's operations. You want to also get a description of what the company's disposal methods are. You want to make sure that you have a list of environmental permits and licenses. You want to have copies of correspondence, notices, and files related to the EPA, state, or local regulatory agencies. You want to make sure that you identify and you get a list of all the identifying any kind of environmental litigation or investigations. You want a list of those. You also want a list of anything like Superfund exposure. You also want to identify and get a description on any contingent environmental liabilities or indemnification obligations. I'm tired, so I apologize. I'm getting the tongue twisters. So that's if you're dealing with a company that's dealing with hazardous materials or is on a site that has hazardous materials. Taxes, you want to make sure that you get federal, state, local, and foreign income tax for the last 3 years. You want to make sure you get state sales tax returns for the last 3 years. You want to get, if there's any audit or revenue agency reports, you want those. Any tax settlement documents for the last 3 years. You want all the employment tax filings for the last 3 years, any excise tax filing, and then you want to know if there's any tax liens. Okay. For material contracts, you want to get a schedule of all the subsidiary, partnership, or joint venture relationships and obligations, okay, and any other material or any other documents that relate to that. You want to have copies of all the contracts between the company, any officers, directors, or shareholders and affiliates. You want to have a copy of any loan agreements, any bank financing arrangements, lines of credits, promissory notes to which the company is a party. You want to make sure you have security agreements, mortgages, indentures, collateral pledges, any other types of agreements that relate to that. If there's any guarantees that the company is listed as a party, you want to have those. Any installment sale agreements, you need to know that. If you have distribution agreements, any sales reps agreements, sometimes the sales reps, they have separate agreements than the employees. Any marketing, supply agreements, you need to have those. Letters of intent, contracts, any transcripts regarding mergers, acquisitions, or divestitures within the last 5 years, that's important to get. If there's any options and stock purchase agreements, you know, involving interest in other companies, you need to know that. You need to see their standard quote, purchase order, invoice, and warranty forms. You want to see if there's any non-compete agreements or non-disclosures that the company has signed. And then any other supply and material contracts are really important. For products and service line, you want to have a list of all the existing products and services, and even the products and services that are under development for that company. You want to have copies of all of the correspondence reports that if there's any kind of regulatory approval, right, for any of the products or services, you want to have access to that. You want to also have a summary of any complaints or warranty claims on the products or services that were provided. You want to have a summary, like if you're actually making a product, you want to have the results of the test, the evaluations. If it's a service, even a product too, you want to check any studies, any market surveys, any data that exists for those products or services, and include the ones that are under development. The customer information, this is really important. You need to get a schedule of the company's 12 largest companies or customers in terms of sales and a description of sales over a period of 2 years. You want to get information to any supply or service agreements. You want to get a description of the company's purchasing policies. You want a copy of the company's credit policy. You'd like to see any unfulfilled orders, okay, for products or services. You'd like to have a list, an explanation for any major customers lost over the 2 years, because sometimes it may have been a compliance issue. I mean, it could be a lot of different things, so that's important for you to know. You want to make sure that you have all of the surveys and market research reports that are relevant to the company for its products or services. You want to also know the advertising programs, what are the marketing plans, what's the budget, and any marketing materials that they have. And then you want to get a description of the company's major competitors. Litigation, you want to see, is there any litigation against the company? Are they being sued? Are they in litigation for anything at all? Are partners fighting each other? Is anybody having to deal with the business in a divorce situation? So you need to be aware of that. Insurance, you want to make sure that you have copies of all the general liability, the personal, the real property, the product liability, errors and omissions, key man. If you've got some key employees, if they don't have it, that might be something you'll have to look into. You want to know what the workman's compensation is and any other insurance for that particular business. And you want to see the schedule of the insurance claim history for the last 3 years. Professionals, who are the people that this company is using for their like, what are the law firms? What's the law firm? What's the accounting firm? What are the consulting firms? What other professionals are engaged with the company that have been engaged for the last 5 years? You want to get a list of those. And then last but not least, you want copies of all articles and press releases that have been related to that company within the last 3 years. So I know that was a lot. I know that's a lot of information. This is kind of a checklist of all the things you should be looking for. I'm going to open it up for questions. I'm trying on these webinars to always have the last 15 minutes or so available for questions. So if you have a question regarding the material that we covered here now or anything else, raise your hand and I'll unmute you and we'll answer some questions. Any questions? And remember, these are free coaching sessions here. So it's like, this is your opportunity not to use up the one-on-one coaching sessions that you have as part of your program. So this is an opportunity to get questions answered, even if it's, the simplest question. If there's something you're stuck on, if there's anything at all, if there's an idea you want to share or a thought or an insight, feel free to raise your hand and share that with the group. These sessions are yours. We're here to help you. Any questions at all? I don't think I see any being written either. Nope. All right. I guess I'll give you one last chance. Final chance for a question, raising your hand, anything at all? All right, everyone. Thank you. We will see you next week. I'm actually not doing it next week, so I think Mike's doing it next week. So I wish you all success and, get out there and find those businesses. Thanks, everyone.